So at the margin, consumption stocks are going to do really well because first of all, you are coming out of the budget, with very little expectation, given that consumption stocks have not done well over some time. So, this 1 lakh crore saving in income tax, and if you give it a marginal propensity to save of around 20%, that is marginal propensity to consume of around 80%, then this 1 lakh crore saving in taxes will actually mean a multiplier of 5. If you assume that of that 1 lakh crore, 20% is going to be saved and 80% is going to be spent. So depending on what is the rate of savings, the multiplier could be as high as 3 lakh, 4 lakh or 5 lakh crore. If the saving is 20%, then it's 5 lakh crores. If it's 25%, then 4 lakh crores. If it's 33%, it's 3 lakh. So this is basically going to be felt on consumption related stocks. And mind you, the consumer discretionary names are going to benefit more since the tax cut has happened on the corporate income tax side, not the GST side. So this is one area which looks quite interesting. As far as the capex related theme is concerned, government has clearly made it visible that 11 lakh crores for FY25 will not be spent. They're budgeting 10 lakh crores. On top of that, 10% increase. So again, comes back to 11 lakh crores. So there's no incremental, positiveness as regards this capital related items are concerned, and that is what you are actually seeing in the marketplace. So I think that is how things are. High beta capital goods, defense, railway, they will be slightly muted, meandering on the downside. And one theme which comes back big in vigor is consumption.
But consumption stocks are also not cheap. I mean, any consumption stock which could benefit potentially because of this government spend, the P multiple is north of 30, 40, 50 times. So why consumption? Why not capex after the correction?
So basically, you are looking at earnings growth. Consumer staples are still going to be slightly muted when, as far as the market price appreciation is concerned, because there the growth vis-a-vis the multiples are not going to look that attractive. But give 1 year out, and you're starting to see consumption names, will exhibit some very robust earnings growth. So from that point of view, yes, I would agree that some of the known consumer discretionary names would be trading at, let's say, 30, 40, 50 multiples on FY25 numbers. But as long as you are buying something at, let's say, 1.5 PG or even 2 PG, maybe there is a case of a market price appreciation just on the back of earnings growth and some P multiple expansion, because this is not going to go away in a hurry. This savings of 1 lakh crore and the multiplier of 3 to 5 lakh crores is going to be felt on multiples even 1, 2 years down the line. So from that point of view, I think you could take into factor the QSR names, the restaurants, the food tech companies. You could look into the white good, air conditioner companies. So because these are discretionary names, automobile companies, retailing companies. Yeah, one has to do the homework as regards valuations are concerned, but clearly this is one area which is going to show, uh, uh, you know, robust earnings growth going into the next 2 years.
Manish, this is Shrishti also joining us, but help us understand what is looking cheap at this point in time, because we have seen a fair bit of recovery in the markets as well, and we have been talking about the consumption theme. But apart from that, which sectors are looking good to you right now?
See, nothing really changes before the budget and after the budget. I think rupee depreciation is going to hog the limelight, and that's not going to go away in a hurry. And so, we are looking at 87 and a half, and it would not come as any great surprise if rupee was to touch 90 quite soon. So, in that backdrop, export looks the safest, the export opportunities, the IT farmers of the world, despite all the clamor around deep seek and artificial intelligence theme going away. I think IT is one name to fall back on. You would have the pharmaceutical names, good defensive opportunity out here. You're seeing the numbers that are come out of the capital market entities, very solid growth. across all names. And this is again from a medium term perspective, looks quite good. Banks are extremely cheap. One major sector which I think should create a lot of value from here on, given that most of the negatives are priced in, is the insurance space. Selectively, health insurance companies look mouth-watering when it comes to the growth and valuations. You will also have some life insurance companies exhibit decent valuation vis-a-vis growth opportunity. And then, of course, you have the financials, the large private sector banks, or the public sector bank, which have reported numbers and are trading at very decent valuations.
Capital good stocks, capital market stocks. So I'm assuming that Motilal Oswal is also looking good as a stock for a fund manager like you.
See, I don't want to talk about individual companies, but suffice it to say that this entire theme, because it's leveraging a lot on technology, and these are somewhat annuity sort of businesses, not specifically the online broking piece, but other pieces across the spectrum. Just why one name, it is across the spectrum. And mind you, why I'm saying this is because in India's case, the financial sector is leading the real sector. And within that financial sector, the tilt is happening away from debt to equity. So give it 1, 2, 3, 4 years down the line, and given that these are very high operating leverage businesses and the size of the economy and the size of the financial market, opportunity is just humongous. Entry barriers are compliance and technology. The big only tend to get bigger in the space. I mean, that is how, and bulk of it is basically robust cash flow. We're not talking about the near-term pain that we're seeing in equity markets because of the short-term headwinds that we are seeing in India, but I think slightly long-term. I mean, you can't create these opportunities overnight, and once you have them in your portfolio, it's better to stick with it.
Very good morning to you, Manish. Cheryl also joining in the conversation. I just wanted to understand your view, given the fact that yes, we saw a big push coming in the budget for the consumption space, and now people are actually looking at these companies which are into the quick commerce or into food delivery like Zomato, Swiggy. They're thinking that that's also where you will have the consumer spending increase. What's your take on that space, and how are you viewing it now?
Yeah, so I think the sport if they actually increase discounts and increase competitiveness, because the contribution margins, if you're talking about -24 on the third quarter numbers, whereas your competitor, the leader, is actually reporting -14. He has a better unit economics than the second player, which has come out with an IPO, and there the unit economics, the contribution, the break even point, when it is being targeted at, let's say, third quarter FY26, looks like a tall ask. So within this whole space, yes, the opportunity set is there because of the announcements in the budget. This space is going to be there in the limelight, but the leader would have the maximum benefit. And that is why we have Zomato in our portfolio. We think this is a decadal story as far as the quick commerce and the food delivery space, and many other items now coming through. So this is one space that one name that we are really betting on. Yeah, it will be positive.
Observing market cap for a company like Zomato, I mean, it was 3.5 lakh crore, it has become about 2.5 lakh crore. 3 years out, 5 years out, can Zomato be a 5 lakh crore market company, or could it be closer to 10 lakh crore? I'm just trying to understand that these are businesses which can really grow. 3 years out, where Zomato's market cap could be closer to 5 or nearing 7 or 8.
So, Nikunj, I think one should compare India's valuations to the likes of, let's say, a Meituan or a DoorDash, and there you will have multiples of what the market cap today is for Zomato. Just going by what numbers we are portraying into Zomato for FY27, we are working with 6,000 crores plus net PAT. So, and then also a long runaway for growth. So my sense is 2 years out, it will be comfortably be north of 100% from where we are currently. That is what my assumption is.
Also, Manish, understand that you were also liking the energy theme as well. And in the recent budget, we have seen announcements coming in for solar power as well as nuclear power as well. Help us understand that what's been your reading within the energy space, and given the government push right now, do you believe more into such stories and any particular play or sector to play with?
No, unfortunately, I think the renewable story is starting to go bad, or let's say not in sync with the valuation which some of these companies are trading at. So, for one, we have a regime change in the US which favors fossil fuels as opposed to renewables. That is one. Second, China, where most of the components are actually coming, is facing with a glut scenario. And today, India is giving protection, and even in this protection, the protection amount has got reduced. So solar modules, etc., have got reduced from 25% to 20% import duty. So I think a sector which is relying purely on protection, and then you have a 2030, after which you really don't know. Yes, you could say that there could be growth and there could be protection that would come from the government, and that would ensure decent amount of profit growth till 2030. But what beyond? I mean, we're already in 2025-26, and assuming that all the targets are met, would the terminal value of these companies, whatever they are trading at today, justify the market cap increase from these levels? My sense is no. Yes, the theme was very good, but I think we would have done well if we would have staggered in a way so that, there's balance of, let's say, a day power and a night power. There's a balance of evacuation, transmission, that infrastructure is ready. So all of these, I think, we have bunched up all of these positives too far too soon, and resulting in elevated valuations and the macro problems globally. I think renewables somewhat will take a back foot from here on.
With this, we'll let you go on that. Thank you so much for taking the time out and speaking with us. But with this, viewers, let's move on and let's put the spotlight on Uno Minda. The company did come out with